Hi, how's it going everyone? My name is Henk and welcome back to the channel. Today we have something very important to talk about, which is why your savings account is now worthless. With the latest release of the Consumer Price Index, which roughly measures the rate of inflation in New Zealand, inflation is at 4.9%, and it's only been around that level for 2 times within the last 20 years. What this means is that things are getting more and more expensive, and the same amount of money will buy you less and less stuff each year. For example, groceries that would cost $100 last year will now cost $105. Now, inflation doesn't really discriminate. It's very, very fair, actually. So groceries will be more expensive, fuel prices will be more expensive, services be more expensive, and pretty much everything is. One of the reasons for what happened would be the large amount of government subsidies that are designed to support the businesses. So more money are coming for the struggling businesses that are literally unable to carry out the normal business due to all the lockdown that's going on. Now, literally, what the government is doing here is that they are borrowing money from the future and paying it off to the people today. The government can literally make money out of thin air. Now, so do you think money is still real? Now, the money that you work so hard for, grinding for hours on end in a job that you may not like, with coworkers that you hate and bosses that you'd rather not deal with, the government can literally just type in some numbers on a computer and make it magically appear out of nowhere. When you magically have money appearing out of nowhere, each individual dollar would be worth less because there's more of it going around. Now, you don't need to be some crazy economist to see how that could cause things to become more expensive. Of course, there are other factors such as the rising fuel price, which may also be part of the reason for the high inflation. But the Reserve Bank of New Zealand does mention that these type of inflation caused by the increase in prices for commodities such as oils are less crucial than the structural inflation caused by an oversupply of money. I'm not going to argue about whether or not it is right to have the country under lockdown for such a long period of time, or whether or not they should be handing out so many subsidies. I think the government is in a damned if you do, damned if you don't position. I think when you start touching on those subjects, people quickly start to argue the importance of human life versus the economy, and how small businesses can't survive, and it may potentially cost more lives, and then there's the mental health aspects of everything. I simply will not go into all of that. Things I care more about are what you should do in this particular situation, and I will try to list some potential options in terms of least potential return to the most potential return. The fact is that inflation rate is very high at the moment. Now, since the year 2000, New Zealand CPI, the Consumer Price Index, inflation has averaged around 2.15%. This compares with the averages of around 2.4% in the 1990s and averages of over 11% for the 2 previous decades before that. Now, since September 2002, the inflation target has been kept to keep the inflation rate from around 1 to 3% on average over the median term. Savings accounts are worth practically nothing because they pay nowhere near the amount of inflation at the moment. So if we look at some of the common savings account, so for ANZ, you're only getting around 0.1% for your basic savings account. And it was pretty similar with ASB and Heartland. And Kiwibank has Notice Saver that pay you slightly more than 1%. And Westpac has a Notice Saver that pays you around 0.5%. So pretty much every single bank gives you less than 1% on your basic savings account, which means that you are actually losing around 4% of your money's value if the inflation rate is around 5%. Which means that if you are just sitting there, you are basically slowly lighting your money on fire. If we go ahead and look at some term deposit rates, the term deposit rates are not significantly better. So with ANZ, they have a 12-month interest rate of around 1.75%, ASB 1.4%, and down there we have Westpac around 1.5%. So they're only really sitting just above the 1% mark. So this means that you're still losing money to inflation. So what exactly can you do here? If savings and term deposits don't really work, what about bonds? Bonds are basically loans to the government or companies. So let's look at a pretty standard bond fund. So this one is the SmartShares New Zealand Bond ETF. So if we go down to the chart for this, so the bond prices have been significantly dropping over the past year or so. So it has a negative return over the past years. But over 5 years after fees and after tax, you're getting around a 2.6% return. While this is certainly better than a savings account, it is still not that great. So what about if we just invest in an index fund? So let's look at one of the basic index funds that we can find for New Zealand, which is the New Zealand Top 50 ETF. Here we can scroll down and look at the performance for the New Zealand Top 50 ETF. So here it has done actually reasonably well over the past 5 years. So the investor returns after fees and after 28% tax over the last 3 years is 13% per year and around 12.6% per 5 years. So finally, we're actually getting somewhere. Even after taking away the 5% in terms of inflation, you'll still have around 7% gain. If you decide to invest in individual companies, you are taking on significantly more risk, but you do have the potential for a significantly higher return. So for this one, we have Mainfreight, who has done incredibly well with their share price pretty much consistently raising after the lockdowns. Another place that you could potentially invest your money in is peer-to-peer lending. So in terms of peer-to-peer lending, I quite like the Squirrel platform because they make a very, very simple platform for you to use without you having to assign individual loans. So you can earn between 4 and 7.5%, which is not amazing in terms of returns, but you do get regular payments and you do have the opportunity to take out your money by selling off your contract to other peer-to-peer lenders and get your money back. There used to be more peer-to-peer lending platforms such as Harmony, but they don't accept retail investors anymore, which is a real shame because I always thought that peer-to-peer lending would be quite a interesting model for people that want to earn a little bit higher interest. If you have a bit of capital, you can play the housing game that many Kiwis have jumped on board due to the low interest rates that we had over the past year and a half. So if we look at the housing price index, it has pretty much gone up fairly consistently, and we have had a sharp rise over the past 2 years. In terms of overall movements for the house price index for the entirety of New Zealand, over the past 5 years, you're getting an average of around a 10% increase in house prices per year over the past 5 years. Although it is a little bit concerning that because interest rates are predicted to rise, and so will the mortgage rate. So it may be possible that some people will not be able to repay their mortgage. Now, if that actually happens, banks may seize those people's properties and be forced to sell them at a lower price, thus lowering the price of housing. Again, this is just speculation, which may or may not happen. And of course, another option is to put your money in crypto. Now, crypto has been the fastest growing asset over the past few years with astronomical returns. Now, recently, Bitcoin has just reached an all-time high of around $67,000, and it's definitely a high risk and high reward asset. Here in New Zealand, one of the easiest places to buy crypto is to use the Easy Crypto website, which I have done a review of in one of my past videos. Well, there you have it. You can invest your money in savings account, term deposits, bonds, index funds, individual companies, peer-to-peer lending, real estate, and crypto. Now, if your goal was to beat inflation, having your money in your savings account, term deposits, or bonds probably would not be the best way to go. Or alternatively, if all else fails, maybe all you need to do is to ask your boss for a pay raise.